All right, well, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us here on this Friday. And boy, what a week it's been. Even though it's been short, we've had our fair share of volatility. I did the radio show this morning early, and it wasn't really that exciting because I didn't like what I saw on the screen. Don't think we've changed very much here. Let's see what we've got going on. All right, let's bring up that corn board. What's happening in the corn? Well, it's a little lower, and it was lower during the morning session when we talked about this on the radio. Let's start with SEP, 6.5 cents lower. 492.5 is last. We've had about an 11-cent range, but we're close to the bottom end of that. We're only about a penny and a quarter off the lows. That'll give you a mental picture of where we're at. Look at the D's corn. Can't hold that 5 level, can we? 498.5 is last. We're down 8 cents, and we're a penny and a quarter off the lows there too, and that's had about 11 to 12 cent range itself. So that'll give you an idea. We're on the lows of the day, really, when it comes to corn. Trading heavy is what I'm going to say. Soybeans, what do we have happening over there? More of the same. That's lower. 12.75 cents lower in the August to 14.35.5. We're about 4 cents off the lows, and we've had a 20-cent range. That gives you more of an idea about where we're at. November, the new crop, 15.5 cents lower to 13.24 even. 3 cents off the lows, and that too is a 22-cent range over there. How about wheat in Chicago, the Chicago wheat market? Well, that's staying close to home. We've got a 2.25 cent rally in the front. That's SEP. 6.60 is last, and that's 2 cents from the high. And we've had basically a 20-cent range over there. So that's going to be the mirror image of what we've got going on in corn and beans. We're closer to the high, 2 cents away from the high on a 20-cent range. That's probably the best way I can say that. And we've got a D's market that's down just 1 tick, quarter cent, 6.76 3 cents off the highs. And that too's had about 17, 18 cent range on the day there. So that'll give you an idea of what's been going on. From Chicago, we go to Kansas City. Let's take a look at the hard red. That's down a dime in SEP. 8.33 is last, and that's decidedly in the middle of the day's range, which is a 24-cent range. How about that? And we've got a D's market down 8.75 cents to 8.36 even, and that too is in the middle of about a 22-cent range over there. Moving from Kansas City to Minneapolis, let's take a look at the spring wheat there. September, 8.58 is sharply unchanged, and 8.58 is pretty much right in the middle, well, about 5.5 cents off the highs, and we've got a 20-cent range there, so upper quarter of that. How's that sound? D's is 0.75 cents lower, that's 3 ticks. 8.64 even is last there. Let's take a look and see what we've got going on in cotton. In the cotton market, that D's is up 66 points to 80.54. We retook that 80 line. But that gives us a chance here to get back with our next analyst. And our next analyst is, if it's Friday, it's Joe Lardy Day. He's with CHS. Joe, thanks for taking the time to come on the show. All right, brother. Well, what do you got in store for us today? What are your thoughts here? The floor is yours.
Well, I think we're going to be in for an interesting run in this market. I think the market's going to have a big task trying to figure out what we're going to get in next week's WASDE report. Are we going to trade weather? Are we going to trade? Well, we're obviously going to trade the big change in acres, but what is yield going to be? And historically speaking, in the past 15 years, the USDA has only made an adjustment to corn yields on the July WASDE twice, 2008, 2012, and 12 was the big drought year, of course. And so they don't have a history of making this change, but I think the market has seen the weather and seen the crop conditions go down, and I think there's a lot of people that are saying, oh, it has to be lower, it has to be significantly lower. And then there's the other crowd that's saying, well, the USDA doesn't change it in July, so are we going to see that change? Right. And I think that's going to leave a ton of uncertainty into this market heading into the report next week.
Yeah, I mean, I agree with you. And I don't want to say the weather part's over. I don't think it is. I mean, we still got some bumps in the road there. And again, with that demand picture, that's something we have to worry about. And then also, we keep forgetting that we've had some hot numbers from the government. We might have higher interest rates to go along with some of this stuff, and that's not going to be good for those operational loans that may be on some sort of floating rate, right?
Yeah, exactly. There's so many factors that we've got moving around right now. It's really hard to pin down one particular thing. And, in the previous segment, we just saw your weather forecast. The upper plains are in the 70s for highs. It's not 90s anymore. And there's rain that's moving through, and we've seen conditions stabilize. So we're going to go in a lot of different directions here. And I think you buckle in and be prepared for some volatility.
As my father would say, Joe, it's enough to drive a wooden man nuts, right? So there we go. I appreciate you coming on. That's an oldie but a goodie.
Yep.
Joe Lardy, he's in Grove Heights with CHS. Thanks for your time, Joe. We're going to go away. We're going to pay some bills. We're going to come back and talk more with me about livestock after this.